Welcome to Ahead of the Curve. Subscribe now.
Welcome back to Ahead of the Curve 1776. It is me, Mr. Curve, guys. Thank you for joining me once again. Appreciate you guys. 2,400 subs. Appreciate each and every one of you. This is the page, guys. I did post a video, like I told you guys before. I had to remove my other content, but going forward, it is fresh, new, provoking, mind thought kinds of content. And we also have the featured channels down at the bottom. Please check out their pages as well. Plethora of info. They're definitely up to speed on a lot of things that's going on. I go over more of my own trading strategies as well as market commentary as well. Also at the top, guys, we got my Patreon up here. We also have Robinhood as well as Webull as well as FX Choice. That is the contract for differences broker that I use, and also EToro for cryptos, guys. If you're new to the channel, we talk about everything from economic data, monetary policy, politics, market, and trading strategies. So let's get to the markets and let's get to the money. So we're going to hop on over here. We have a recap of the week. We had the Australian Central Bank actually post their interest rate decision, went up about 30 basis points. We're going to scroll down here. We had Jerome Powell for the Senate Banking Committee testifying as well. We had Governor Lowe as well for the Australian Bank testifying. We had the ADP non-farm employment change. We got 240,000, basically 40,000 above, so a beat on that. We also had Canadian the Bank of Canada actually released their interest rate decision. They are indicating a pause. I think that will also be echoed amongst the G7 in its entirety, as well as we had Jerome Powell again, the two-day testimony, and then we had the JOLTS job opening. We achieved a little bit higher number on that, although it is a little bit lower from the prior month, and that was actually revised upward. We had crude oil inventories down. That is for WTI, for all the traders out there for that. We did have a little bit barrels on hand, shortage of barrels on hand, so that definitely pushed up the price for the last trading day, of the week here. We also had the 10-year bond auction. That guy was 3.99, absolutely crazy. We're definitely inverted on the yield curve for right now. And then we had a bid to cover, which was a little bit lower. We typically like to see about at least a 2, but more so closer to the 3 mark for the bid to cover for a healthy bond auction. Scroll down here, we had the beige book as well too. That's a light indicator. A lot of people like to read that for a little bit softer insights onto what's going to happen. Scroll down here, we had the unemployment claims that did tick up a notch. If we actually go ahead and look historically here, this was around the the health crisis, and then we kind of tapered off, and then we kind of been coasting steady, but we definitely are picking back up here. Let's go ahead and scroll down here. Let's check them out. So about a good healthy range, but we'll scroll down even further. I kind of want to show you guys this. Crazy numbers would be kind of at the beginning of the sickness here. We definitely had about 700,000. I think we will probably get to that point at some point this year. I am calling it out. Is the dollar going to get a boost? Are we going to have the risk off aversion happen? It did happen 07, 08, 09, more like 08, 09. And then we had basically the redeployment of capital back into the markets. Will that happen again, guys? Who knows? I definitely think so, because we're at that economic part of the cycle where tightening is exacerbated, and they're probably going to pause to see what's going to occur. Let's scroll down here, guys. We had the Bank of Japan release their monetary statement. They were very dovish in theirs as well too. They're definitely going to pause and see what's going on. We had the UK's GDP month over month that definitely ticked up. Again, you got to be careful with that because it is price, and obviously the pounds have definitely been taking a beating lately. The US dollar is definitely getting stronger, bringing both the pound as well as the euro back to parity levels, which is unheard of for today's world. And then we had the Friday. I definitely capitalized on that. This is where the biggest moves typically happen. It's on interest rate decisions as well as employment situations for the G7. So we had Canada releasing their numbers here, 21.8K. That's definitely a huge beat. Again, that is pretty low compared to what the prior number was. So I mean, it was kind of nice to be able to beat that, or cross that threshold. And then we got basically the unemployment rate still holding steady at 5%. Again, that number is a rolling number, so a lot of people are falling off as people are going on, and typically the number only rises when we start to see more people exceeding the job actual gains. So we're getting net actual losses. Capacity utilization for Canada, 81.7, which means they're definitely cooling off a little bit here, so we probably will start to see this employment change tick up. this is the first turn of the tide for the employment situation. We're starting to see the weakness occur, and to be honest with you, this is what they want. They want it to get weak. That is their idea. Hence why they tighten. Hence why they remove liquidity. Hence why they do the overnight repos. Hence why they do everything they're doing, because they want to make sure that the economy is getting back to that, they believe, 2% target. So I think we're already at the terminal rate. I think they might do, 25 basis points. I recorded this video, my last video, prior to the employment release numbers, and I told you, depending on what that looks like, might be the basis or the case for what they do next in a couple weeks. Actually, it won't be next week. It'll be in a couple weeks. And they got a lot of time. They still got more economic data that has to be released, and they have said it themselves that they are data dependent. So we'll have to see how that goes. And why I harp on this so much, guys, is because I want to make sure that you guys are keeping up with the economic data, because that's what drives the markets. That is the bedrock of the markets. And then, we got an uptick here. We got 311,000 on the employment change, and then the unemployment rate did tick up, guys. So we are starting to see more people being added to the unemployment claims list compared to the actual net jobs, and we'll take a look at that as well too. We also got the federal budget in negative territory. We always are considering that. That's pretty much always how it is. Give me 1 second. Now let's look ahead to the week ahead. We have daylight saving time coming back on, which means basically the U.S. will shift an hour forward. Typically in October we shift an hour backwards, and then the other half of the world will do that as well. Typically about a week after we do it first. So we'll go ahead and have daylight savings time. That will affect some of the servers for trading. The same liquidity will still occur around the same times, but again, it will just be slightly off based upon certain servers for trading. I got to keep it layman's like that because everybody uses different platforms, so it just depends. We'll come down here. We got the UK releasing their employment situation. We'll see how many unemployment claims they got, or claimant count change. We'll see probably positive numbers there because more people will probably be on that. We'll see 3-month over year average earnings index. That'll probably tick down as well too, because technically it's really a year over year, but they average it for the 3-month there. We'll also see the unemployment rate. That's also projected to tick up. Let's scroll down here. CPI. It looks like it's projected to kind of come down, and with those employment claims going up, not so many jobs added as one would like, as well as the unemployment rate ticking up. We're probably going to see a softening on the CPI number. Again, they exclude energy and food. that could be going up, so technically we're probably going to definitely see a pullback in this number here. Literally says changes in prices of goods and services purchased by consumer. And if you scroll down here, or somewhere in here, they probably don't even say it here anymore, because it's kind of obvious that they take it out now. Core CPI, they're also going to look at the here, go excluding food and energy. So the CPI includes that, but then also the food and energy is excluded. They really focus more on the core than they do with the actual general CPI. But all of these numbers are definitely looking for soft reads, which means that most likely it's going to be more inclined for them to possibly pause. They may surprise the markets, and the markets would absolutely love. The markets would love for it to be basically a no interest rate hike and a very dovish tone for the statement. That's what they would love. I'm not going to lie to you. That's what they would love. Even if we get a 50 basis points and we get a lull in the statement as far as increases or raising the terminal rate, most likely we will still get a nice tick up in the markets and the dollar softening on trading. So honestly, guys, just keep your eyes open. I think the dollar is going to get an overall boost, but the markets love to fight the Fed. And the famous saying go, do not fight the Fed. The markets have been running against the Fed over the last 3 or 4 months. They are fighting the Fed tooth and nail. Even for this last trading week, the dollar has definitely softened quite a bit. I made decent trades on the dollar softening. It was kind of a seesaw effect initially, but Jerome Powell kind of helped with his 2-day testimony, but it did not actually win over the hearts of the investors and traders. So basically, we're going to scroll down here, guys. That CPI number on Tuesday will provide tons of liquidity, so definitely be around for that as well. Also, we got the core producer price index as well as the core retail sales. Huge numbers coming out at 7:30 here. And then also we got the employment change for Australia. That's going to be a huge impact as well too for the evening Tokyo as well as Australian session. We're also going to have business inventories. That's going to be huge, and crude oil inventories that might move WTI as well too. We scroll down here. We have the Eurozone, the European Central Bank's interest decision interest rate decision. They're going up 50 basis points, so the U.S. might mirror them a week later. And then they might have, but I'm telling you right now, most people will bake into the cake this 50 basis points interest rate decision. But what they'll really be looking for is the economic press conference as well as the statement. So the statement will come out in the press conference. But what most likely will happen, either they're going to have extremely hawkish tone or going to have extremely dovish. I don't think they're going to be anything in the middle, because they're either going to say, hey, we still need to further hike rates, or we're going to take a pause. A pause means dovishness, because like I told you guys, they can borrow that capital at a lower rate compared to projectively in the future it being higher, which means that they can make money, which means that they're basically going to be able to, they view that positively, right? They view that accommodatively. So we'll scroll down. We got natural gas storage. We'll scroll down on Friday. Friday is typically a pretty light day, but we got the preliminary University of Michigan consumer sentiment, and that's going to be huge. That's projected to tick down, but I definitely think it's going to tick up, because for some reason this number always ticks up. It's always got a lower reading, and then they survey some people, and then they always are saying great things about it. So that's probably going to be a boost up for stocks there, as well as a weakening for the dollar. But we'll probably have a seesaw effect again for the week. We don't have anybody really speaking this next week ahead. We basically got the CPI coming out. That's probably going to be soft. We're going to have consumer retail sales probably be softer. It's projected to be negative. We got the Empire State Manufacturing already projected to be negative. So I think overall the Fed's going to get its numbers. They still might increase that 50 basis point, but this might be the dovish interest rate hike probably that we've seen during this rate hike cycle. So will definitely be eyes and ears on the pulse of the market as well as the dollar to see what occurs, guys. And again, you have to be, a person like me that's a trader and, has multiple different things going on in the markets. You have to be reading it in real time. Hence, I'll just kind of jump charts here, and we will look at the dollar index. I'm always trading because everything that we trade in is priced in denominated US dollars, right? So we're just going to make sure we keep a beat on what's happening with the US dollar. That's our key insight to see what actually may be occurring. Like if we go back for the last trading day, we see if this is going down, the dollar actually getting weaker. And then around about this time in the morning, we've seen significant slide on the weakness for the dollar. So that helps you gain somewhat of an edge to see what actually might occur. Let's go back over here, guys. And make sure you like, comment, share, subscribe to the video, guys. I know I'm kind of interjecting there, but yeah, again, a pretty light week, heavy U.S. focus, as well as ending the week off with the Eurozone central banks seeing what their interest rate. Again, they're projected to do 50 basis points. Will that occur? Most likely, because between the big G7, they don't like really any surprises, because again, the institutional money needs to be able to predict where things are going, so they don't like to surprise the markets. Will they? They could. That's always can be a wild card, because you never know what they might be getting, especially as they're getting more keen on being data dependent compared to their own projections. So, we'll definitely see how that goes, guys. Now let's get you guys over to the Forex market to see what occurred for the week and what might unfold for the week ahead. So for the week ahead, guys, for the week that just passed, guys, as you guys can see, we started the trading week about the 6th, and then we had that nice slide with Jerome Powell, jawboning a lot, getting the markets to, really take him serious about the increasing and the rate hikes, as well as we seen a capstone here of just extreme weakness to start off due to that employment data. That employment data on Friday was huge. I mean, a lot of people viewed that as a pause indicator for interest rates, which means we might be going back the other way, which is huge. So between this guy as well as the euro as well as the pound, we definitely took they had huge upswings in the euro, the Swiss franc, as well as the pound there. They definitely did very well. And again, those are the risk on currencies, if you will. The US dollar, the Japanese yen, and some of the commodities are risk off. So that's typically how that goes. And then we'll just go to the markets here in general. But again, guys, overall, I think probably for the next week, we're probably going to see more weakness. If those numbers come out worse than expected, as they're projecting, or at least being at the threshold, yeah, we're probably going to see an uptick, guys. We're probably going to see an uptick. We'll probably retest let me go on a daily chart here, maybe like the 1.08 level, 108 cent level, or the 110. probably get back up to that 110 because that's where we were prior to the pretty downward slope for the US dollar here for the strengthening. So we'll see how that occurs, guys. Again, a lot to look out for. This is probably a huge week. Because it'll be the week before we kind of have to wait the 2-day meeting for Tuesday and Wednesday to see what the Fed unveils. So again, guys, the week ahead, probably more US dollar weakness. Is the dollar going to get a boost? Is somebody going to come out and say something? Will the market sell off and that actually pull the dollar down? The sell-off will put people to put their capital on the sidelines, so then they're technically strong US dollar. We'll have to see, guys. Again, guys, I trade this stuff in real time, so it's hard for me to predict, but again, if I had to bet, probably maybe ticking back up to the 110 mark for the week. It is very well possible. We have a lot of catalytic things that might occur to get us back up to that level. So let's go ahead and get you guys over to the metals market. Guys, look here. The metals here pretty much had a nice little slide here. I'm just going to show the silver chart here, but basically had a nice slide. I mean, basically slid essentially all the way down, a strengthening level to retest that $20 psychological level that I call there. But we might have a pop back up here again, like we said, with the other things that's going on. Plus, we had the whole Silicon Valley Bank situation. I'm pretty sure you guys have heard about it if you're in the sector like me, financial sector like me. Pretty much, it's a bank failure, which means that a lot of the bank stocks have been shedding off their share prices recently just due to everything that's going on. And again, guys, with the tightening cycle, they're not able to lend, they're not able to make their payments that they have to pay for, as well as the cost of capital is more. So most people might not be taking out as much or making their interest payments on the debt they've already issued. So it just depends, guys. It's definitely a tricky situation. I definitely believe this is all reminiscent of the 08-09. So I definitely do believe that they're probably going to turn it off. Again, guys, the last time we were in this interest rate cycle, we got up to about 5.25 before, and we're only about 50 basis points after this rate increase. We'll be probably 50 to 25 basis points off from there, guys. So again, guys, we're pretty much right there. They believe that the terminal rate might be 6%. I believe it might be 5 to 6%, but we'll have to see how it plays out. But again, guys, for the week here, we had that seesaw effect. Again, guys, we took that downward slope with, Jerome Powell's testimony, and then we just basically pushed up with the employment data. So you got to be mindful of the situation, guys, and you got to know, the 4 pillars of the trade, what you're trading, when to get in, when to get out, and how long you're going to be trading that asset or whatever you're trading. Again, guys, this is not investment advice. Make sure you talk to a licensed professional and do your own due diligence as well. Let's go ahead and check out a gold chart as well. As you guys can see here, had the same movement, guys, pretty much mirroring each other. Again, these are the two monetary metals, guys, so essentially they will kind of run in tandem. I will say, since gold is technically higher in dollars, it does lead the pack as far as the trading volume as well as the movement. So typically gold will move a little bit faster than silver does, just due to the trading volume. I mean, it's just literally, this is supply and demand of the trading. So as far as the week ahead, might be some weakness, guys. Will the dollar get stronger? We're gonna have to see basically better than expected readings for the dollar to do better, because it's projected for the dollar just naturally just to be doing worse. And again, we are at the end of the tightening cycle. Let's get you guys now over to the energies market. Let's see what occurred there and what might happen for the week ahead. Check it out, guys. WTI here. The markets are closed, so I'm not able to view the full chart of the real-time trade, but basically had the same effect, guys. Again, it's priced in US dollars, so you are seeing that a lot of things do run together. We didn't get quite a huge movement from trading on Friday, but I mean, it had about a dollar and a half run, so it's not too bad. Almost $2 there coming up. So I mean, you definitely could have got in on that, if you were paying attention to what was going on. Again, guys, the ECB meeting is on Thursday. We will keep our pulse to that, to the markets, to see what occurred and how the markets digest what is said about that. So we'll check it out. WTI, Brent, pretty much we're all in tandem. Again, they are pricing US dollars. Let's get you guys now over to the crypto. Actually, let me go back. So for the week ahead, probably more weakness, guys. I mean, the data is showing that it will be weak, right? Which means that the dollar will be weak, which means that we most likely will get a pause, which most likely means that you will get a rate increase, but we'll get a dovish statement and a dovish possible press conference, again, we could get a mixture of the both. Right now, we're in that weird period where they may be projecting that they're going to be tough, but the actual actions, maybe the markets will call their bluff. So we'll see how it unfolds. Let's get you guys now over to the cryptos market. Let's see what happened there. Now, cryptos trade 24/7, so I'm glad I'm able to actually view this like this. But as you guys can see, essentially the dollar is gaining some weakness just over the weekend. A lot of people have digested what occurred during the week, and they are expressing that digestion with the markets, with the cryptos market over the weekend. So we definitely got the dollar getting weaker here. Again, they all denominate, most of them in US dollar, and they're weakening here. So it definitely, that employment situation, as you guys can see here, heavy indicators are showing that this is a problem and that we might be turning the tide. Again, guys, that dollar might need that boost. I mean, you guys seen, is the dollar getting a boost? Maybe, maybe not. You're going to need the market makers, as we call them, to give the dollar a boost at this point, because the markets do not believe that that's going to occur and that they are going to switch to a more neutral / accommodative stance very soon. And then we'll go on to BTC. That is the most weighted one here. We'll go out on a 1 hour chart for this guy. Had the same slide happening. And then we definitely are ticking up here. We'll go from the last trading day here, so the 10th, and then we kind of had a little bit of a lull there as far as actual trading, and then it kind of moved up because it is denominated in US dollars, and the dollar did softening a little bit. So guys, that is pretty much what I think going forward, probably. And as far as BTC, because I like I like trading this guy. Probably moving back up. I mean, we'll probably move up to the 22, 23 mark. Maybe by if we get extreme weakness, maybe back up to 30,000, almost be half of what the high was. So definitely moving up, guys. Watch out, and we will see what occurs with the cryptos market. Let's get you guys now over to the dollar index here. Now, dollar index is relatively flat on the week. If we look at where it essentially started here, we're about the 104.60, and we're about the 104.60 to end. So essentially very flat. Started out with the jawboning for the 2 days from the chairman, and then we kind of just slid off because the markets was like, all right, let's get back to it. So where I see it going, possibly maybe retesting that 103 level at some point, because I'm just not convinced that that we won't be softening here. Again, maybe I'm wrong. Maybe we're going to get, very, very strong economic data that will indicate, hey, we have to keep going. We just have to. It's possible. I mean, again, guys, I'm a day trader. I am not Nostradamus, so I don't know exactly how to play out, but I always capitalize on what does occur in real time. So that's always one thing to keep in mind. Also, do your own due diligence, do your own homework. But I probably see the dollar maybe weakening a little bit, probably pulling back here, maybe to the 103 mark. We get extremely good data, possibly pushing up to the 107. Again, guys, we will see how things develop. Let's get you guys over to the stock market. Let's see what occurred for the week and also for the week ahead. So stocks actually ended the futures definitely down here. The tech sector as well as banking just got clobbered, absolutely destroyed over the week. I mean, we're pushing back to that 31,000 on the Dow. S&P, we're probably going to get to probably still pulling off. There is a chance we could see a sell-off in the stock market and a weakening in the dollar at the exact same time. Maybe some people are hoarding cash, they're going to gold, going to silver, going to platinum. The VIX, remember what I told you guys about my old videos? If the VIX is over 20, very volatile markets are occurring. We typically want to see the VIX under 20 for more stable, placid trading and investing. But if we see over 24, watch out below. We might be seeing a little bit of a pullback there. Also, we got the 10-year, the Boon, and the Japanese note there, all pulling back there a little bit, but they're still relatively high, guys. I mean, so typically when we see these yields going down, we see, we basically see the dollar getting weaker. And if we see the yields going up, we see people are getting into more dollar-based, debt. They're holding their capital in basically safe haven, if you will. We'll go to the oil. As you guys can see here, pretty much up on that. Gold is up on that. FX, you guys know the situation. So essentially, It's a lot going on, guys. It is definitely a lot going on, and we will see how it plays out. A lot of banking issues are happening right now, so definitely be mindful of that. Keep some capital to the side. Maybe take a little cash out, keep on hand just in case a bank, a systemic contagion situation happen. You got to watch out for that. All in all, guys, let's get you guys now over to bar chart. I want to talk about a few things there. So as you guys can see here, definitely an overview. We have the tech pulling back a little bit. It only ended, Tesla only ended up a little bit, but overall it shed about like $20 off of the week for sure. Nvidia definitely pulling back. Apple pulled back surprisingly. I do think unless it's going to get drained out with everybody else in the tech sector, it probably has the best chances of rising. Microsoft as well pulling back. Pretty much everybody pulling back. Bank of America, JP Morgan surprisingly is the one bank that actually is still doing good there. But other than that, yeah, that's pretty much crazy there. But as you can see here, let's just look at this U.S. regulators on Friday. Closed Silicon Valley Bank, the biggest bank to fail since 2008. Definitely reminiscent of the Lehman situation. So we might be replaying. History doesn't often repeat itself, but it does rhyme. So, just be mindful of that, guys. Be wary. Keep some capital to the side. Definitely get into certain trades that make sense. And also remember the 4 pillars of the trade before you start anything. What are you trading? Is what you're trading worth it, right? Maybe it's not worth it. Maybe it is worth it. Maybe it's too much risk to reward. Where you're getting in at. That's always key, because where you get in at is where you end at, which is this 3rd pillar. And then how long are you actually going to hold it? What if the position goes against you? What if it shoots up faster than you anticipated and that moves your timeline for exit? Have those things narrowed down so that way you know what you're doing prior to whatever you decide to do. And again, guys, that's all I really got for the week here. We'll run out a 26-minute video. Again, guys, I appreciate you guys going through with this with me. We'll get into more stuff as we go along here, guys. But again, these are market overviews. I'm gonna do them about twice a week. I appreciate each and every one of you guys. Please like, comment, share, subscribe. I can't say that enough. We definitely need to get the channel to a more visible platform, so that way we can inform a lot more people like yourselves that you do have somebody in the game with you, so you're not just alone. So like I said, guys, please like, comment, share, subscribe. And as always, in order to be profitable, one must have the knowledge and insight about the next trader position to, you guessed it, stay ahead of the curve, guys. I'll see you guys next week. We'll see how things unfold, and enjoy your weekend. Happy trading.